Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. We're recording this interview on Thursday, March 27th, 2025. The gold price actually hit $3,100 for the first time in history today. It's corrected a little bit. It's a little bit below 3,100. The 10-year US Treasury bond is substantially higher compared to the past, with Trump now in the White House and the Republican-controlled Congress not being able to get a lot of the legislation that they wanted to pass, especially the Trump tax cuts. The 10-year U.S. Treasury yield is at 4.369%. Today's guest is a returning guest. He's a former hedge fund manager, and he runs the investment research company with the paid newsletter Deep Knowledge Investing, Gary Brode. Thank you for joining me again.
Thanks, Jason. Always great to talk to you.
Now, Gary, we're 2 months into the Trump administration. I want to get your thoughts on his first 2 months. Now, he was promising the corporate sector, small businesses tax cuts. The tariffs went in first. Do you think that this is a misfire on his policy, or do you think that this is intentional?
No, I don't. I don't think it's a misfire. I think the Trump administration came in with a very clear, very active plan. They talked about those first few weeks flooding the zone. They were literally in a situation where they were doing so many things so quickly that by the time, their opponents in the Democratic Party or in the press got around to responding, they were like two news cycles too late. So I think they came in with a deliberate plan. Whether you like it or not, that's a totally different scenario. But I don't think what we're seeing is accidental chaos or anything by accident. I think these guys were very well prepared. And again, that doesn't mean that everybody listening will like what they're doing, but I think they came in really ready to go.
I think they were hoping that they could get the Trump tax cuts passed through Congress first, and that the tariffs would come in after. So I think like they screwed up the order, and because of that, I think like we'll see if the tariffs actually get enacted next week. What they're supposed to get enacted April 2nd. We'll see if Trump pushes it back again. If they do get enacted, though, do you expect that there will be a stock market correction soon?
So I think a couple of things. One is I think there are a lot of misconceptions about the tariffs. Um, and the reason for that is because from what I see, everybody only presents one side. The Trump crowd is saying, "Hey, if we implement tariffs, what we're going to do is collect a lot of money from people who aren't Americans." Okay, that's not necessarily great logic there, but what they're actively trying to do is onshore production, and I do think that's important. One of the things that people, I live in Connecticut, right outside of New York, the financial capital of the world. You live in the Washington, D.C. area, our political capital. And it's just really easy to lose track of however many people there are in the Midwest and the South who are just dying these deaths of despair because all of their jobs have been outsourced. And, for people like us, we've benefited from low labor costs and low costs for goods that are shipped from overseas, but it's had a real cost for people. And so I think, a big part of the goal that the Trump administration has is to onshore manufacturing. And we're starting to see, some nods in that direction. So, some of the semiconductor companies, Apple just announced $500 billion, Taiwan Semiconductor more than $100 billion. Just the other day, we've had multiple automakers say, okay, well, instead of manufacturing in other countries, we're going to manufacture these vehicles in the US. Now, detractors will say, oh, but it's going to take years, and some of that was planned spending, and it's not necessarily all new jobs. And okay, but incrementally, they're heading in the right direction on that. And we can't just outsource everything. And by the way, from national security point of view, it is a problem if we don't manufacture our own computer chips, we don't manufacture our own pharmaceuticals, right? I mean, there's just only so long we can bleed off what prior generations have done. And so that's the argument that they're making. And they only make that argument and they ignore the fact that it can lead to potential inflation, potentially higher prices. Although in his first term, we didn't see that. And, one of the things people forget is the prior administration, the Biden administration, left the Trump tariffs in place. And we didn't end up with inflation until the government went crazy printing money, right? So it's not really a tariff issue, it's a money printing issue. Now on the other side, the detractors will say, oh, well, we're just going to end up with higher prices and it's just a tax. And they ignore the potential benefit of onshoring manufacturing, better supply lines, more secure supply lines, better jobs for people. And so I think the whole thing is really much more complicated than people present it. And everybody does their own talking points. What I would like to see is I'd like to see people have a more comprehensive conversation about it rather than just dismissing the better arguments being made by the other side.
Yeah, I agree. It's very complicated because I've studied financial history with the Smoot-Hawley Tariff Act. I just interviewed Austrian school and more libertarian people that were quoting like old books from the 1980s and 1990s about tariffs and free trade policy. Now, my view of things, Gary, for the last, 3, 4 decades in the United States with NAFTA and some of the other agreements, especially post-World War II with the US dollar as a world reserve currency, Triffin's dilemma, is that the US did have more, I would say, free trade policies for imports, and the other countries did not have mutually beneficial free trade. They had a lot of high tariffs on a lot of U.S. goods. So for importing stuff, and we've heard the U.S. Treasury Secretary talk about this. He said that the way the economy was set up post World War II was that a lot of imports came into the U.S. and they didn't have much, if any, tariffs on them. But he said that hollowed out our manufacturing sector.
Yeah, I think that's exactly right. And one of the things that I think people are missing, or they're either missing it or it's being intentionally misstated, is when President Trump talks about reciprocal tariffs, the argument that's typically made against it is, he says, I'm making up numbers here. He says, hey, this country is taxing our exports to them at 30%. Again, this is a hypothetical example. We're taxing their exports to us at 10%. And he's saying we should have reciprocal tariffs. This is exactly what you were talking about. Now, the free trade groups, are saying, well, wait a minute, just because this hypothetical other country is doing something stupid, that doesn't mean we need to do something stupid. Let them screw up their economy. Okay. But the issue with that is exactly what you said, that gives them a competitive advantage and we lose those jobs and we've lost our manufacturing capacity, right? This is, again,
well, then you're setting up the economy then only for consumer spending. But if people don't have jobs, how do they spend then? What are they going to get? Transfer payments from the government, from Medicare, Medicaid, EBT cards? Because if you've set up the economy and consumer spending and people don't have jobs with income growth, how do they have savings? How do they have capital formation? How can they have more discretionary income budgets then if the GDP is based on consumer spending and they don't have those jobs that you're talking about?
Well, Jason, the only way that works is if what we're doing right now continues. And what we're doing right now is we're printing dollars, financing it with debt, and handing it out. And by the way, more than 100% of GDP growth our last few quarters has been excess government spending. So if you take a look at the number of dollars, like if they say GDP is up 2%, or I think it was 1.2% last quarter, something like that. So if you say, okay, we had X number of dollars of GDP growth, and then take a look at the growth in debt, and that's just the federal on-balance sheet debt, it exceeds that. And so the easy conclusion to draw is that more than 100% of our GDP growth is wasteful government spending that's all debt funded. Jason, this would be like the equivalent of you and I maxing out our credit cards, paying for private jet travel to expensive resorts, spending thousands of dollars a night and, these expensive resorts, running up massive credit card bills, and then telling everybody, well, look at how much more income we have, see how we're living. But we didn't have more income. All we did was pull forward consumption. And that's all that's happening here. The other thing that I think, and so by the way, that is completely unsustainable. The only reason our economy is growing right now and is not growing is because wasteful government spending, theft, graft, money laundering is being counted as production while the actual productive private sector is declining. The other thing that I think people are missing is, people get upset about these tariffs and the reciprocal tariffs, but what they're not focusing on is reciprocal tariffs could end up with lower tariff rates for everyone. So if we go back to the hypothetical example, if this, random country were tariffing us at 30% and we say, okay, we're going to raise our tariffs on you from 10% to 30%, they might say, oh, well, now we have reciprocal tariffs. What if we lower it? And the president might say, okay, then we'll lower with you. And so we could end up at an equilibrium with lower tariffs. And the only way we get there is by threatening higher tariffs, which, the free trade groups are saying, no, this is wrong. We should let them, have advantageous trade because they're looking at an academic model that is terrific in a college classroom with a textbook, but is not working for Americans in the real world.
Now, I'm not in favor of any tariffs, and I've read about Smoot-Hawley, and I agree with, in theory, most of what the Austrian school is saying about them. But we've had a lot of this stuff for decades, and it hasn't really been free trade. A lot of this, the way the economy was set up, the way the GDP was set up, what you said with consumer spending and counting what government spending as positive towards GDP, even if it was straight up money laundering or theft, or handing out EBT cards. All this stuff was counted positively. Government employees for the last 2 years, 18 months, I think, Gary, were counted where the majority of jobs created were government employees, and then they were revised downwards later. They structured the economy this way post World War II with consumer spending and the world reserve currency. It's called Triffin's dilemma. But then you don't have a balanced economy. You have an economy based on only consumer spending, where the consumer doesn't have a high-paying job, a manufacturing job, or the economy is not adapting, creating new products and services, new industries very, very well because of what rules, regulations, taxes. And so the economy becomes this mess that it's gotten over the decades post World War II, and this is the problem it's accumulated because what all these dollars were exported to, what the DC got away with this exorbitant would you agree? Sorry, I'm rambling here. Would you agree that a lot of this is because of the world reserve currency and Triffin's dilemma and how they set up the economy based solely on consumer spending for GDP?
I completely agree. I think you're entirely right. I also think you made a really important point, which is the government has their thumb on the scale in just a huge part of our economy. We have, a $30 trillion-ish economy, and on balance sheet government spending is ballpark $7 trillion. That is a gigantic number. And then remember, there are off balance sheet accruals that are probably another 4 or 5 trillion. And so, call it we're spending maybe $12 trillion a year or accruing all of that against a $30 trillion economy. Like, the government is an enormous part of the economy. They've got their thumb on the scale. It's a gigantic problem. And, one of the things that always kind of makes me laugh and irritates me is, when you talk to the socialists, and, you and I are both, free market people. And when you talk to, the socialists and the communists, I don't draw a distinction between them, you always say, well, wait a minute. Why is it that everywhere they try this, you end up with poverty and it doesn't work? And their answer is always, well, they've tried it, but they didn't try it right, and they didn't really commit. And then, human error is always the answer. But they always will complain about issues that we have here in our supposedly capitalist economy, and ignore the fact that we do not have a capitalist economy. We have an economy where the government controls, maybe 40% of spending. And that is not a capitalist economy. We are overregulated. The government has their thumb on the scale in a million different places. And they're pushing money around. They're favoring some groups, not other groups, certain industries, not other industries. So, I'd love to see us actually try capitalism. And, one of the things, oh God, I can't remember. Macro Jack. He's on Macro Jack on X. He put up a fantastic graph last year showing inflation by sector. And one of the things I noticed about it is, Jason, where we had the most inflation were the sectors where the government is the most involved. And where we had the least inflation were the sectors where the government is more hands off. And so, I think you're completely right. And I would love to see us actually try capitalism and see what that does to the inflation rate and our standard of living, before blaming everything on free markets.
And for our listeners out there who know Austrian school economics, a lot of this goes back to Say's law in Keynesian economics when it first started, because he never actually disproved Say's law. I'll just summarize it briefly. Say's law is where you're supposedly, it's supply side. You're supposed to produce more goods first, save the difference, and then from your capital surplus, your capital accumulation from your high salary, your savings, then you're supposed to consume. Now, Keynes said the opposite. He never actually disproved Say's law when they implemented Keynesian economics, and then you had a change in GDP, and governments love this stuff because they started just coming up with these ridiculous GDP calculations. And then now we've gotten to the point where like a lot of the GDP, the inflation data, the jobs reports, they're all what heavily managed or massaged and or outright economic propaganda.
So, by the way, Jason, the what you just described, let's even simplify it further. I think you gave a great description, but let's simplify it even further. This is like, being a parent and asking your second grader, you know, would you like to eat, your broccoli and spinach and, fruit and vegetables? Because over the long term, you will grow up strong and healthy and live a better life decades into the future. Or would you like a lot of candy right now?
What do you think the kid's gonna answer on that one?
Right. And one of the issues that we have, people love to talk about, how Americans are so stupid. I see this criticism all the time. And the truth is I do not think our people are stupid. I do think that our government, which has control of the education system, deliberately does not teach anything about finance, investing, economics, and in the rare situations where people are learning economics, unless you're at the University of Chicago or like the University of Tennessee, they're teaching Keynesian economics, which is as you pointed out ridiculous. Nobody's learning Austrian economics, and so I don't think our people are stupid at all. I do think that the people who are in charge of educating them have deliberately ensured that if you want that information, you have to go look for it on your own. And then, you have a population of people who work. And at the end of the day, like, do you think people want to relax and play with their kids? Or, do you think they want to start reading about finance and economics and go look for, Austrian economics blogs? Right. I mean, like, there's a point where people are exhausted. And I just think we need better education on this stuff. I think if people really were given the choice and you explain to them, this is why eating your broccoli now, this is why producing more than you consume, saving and investing the difference, and being financially secure for your whole life. If you explain that to them, people will say, okay, I get it. I understand why maxing out my credit cards today is not a good idea. The government also works against that, Jason, right? When your currency is constantly debased and constantly depreciating, that pushes people away from saving and investing because you can't save in dollars, right? And pushes them toward current consumption. If the money you save is going to be worth less a year from now, you might as well have fun with it today, right?
I guess that's one way of looking at it, or you're going to gamble. So, and you're seeing this with like the popularity of sports betting. There's a bunch of young adults who I've had conversations with them. They look at a chart, they don't know anything about financial markets, and they're gambling thousands of dollars on altcoins and meme stocks and stock options, and they don't know any of the fundamentals of a company, what would drive the stock price. So there's just a gambler mentality, whether it's sports betting, betting in the game on their phone, or in the capital markets now.
Jason, you nailed it. And in fact, earlier today, do you ever read any of Jared Dillion's stuff?
Yeah, yeah. Actually, he was supposed to be on a couple days ago before you, and we had to reschedule. I wasn't feeling well.
I read him. I like he's one of those guys where I often agree with him, but even when I disagree with him, I think he presents his point of view really well. Like, I look at it and I think, okay, I see your thinking, makes a lot of sense. I draw a different conclusion, right? Like, he's respectable whether you agree or disagree. He had a great article out today on options trading and how people took insane risks and didn't realize how much risk they had in their portfolio. And that was his piece today. And I actually linked to it on X. And the post that I wrote was very similar to what you just wrote, said. And I posted it earlier today talking about how our young people are incentivized to gamble. And one of the ways they're doing this is zero data expiration options because they don't see saving and investing or a norm, what we would consider a normal job or what our parents would consider a normal job. They see that as a sucker's bet, and in many ways for them it is. And so the way they're turning the stock market into a casino is they're taking these one day bets where in a day you'll make 40%, 50%, 100%, or you lose everything. Right. I mean, it is the financial equivalent of going to Vegas and betting it on black. Like, maybe you double your money, maybe you lose it all. Who knows?
That's like a zero sum game. Yeah, it's not good risk and reward. It's not like dollar cost averaging for your investing or buying each month a certain amount of money with your retirement account into an index fund of the S&P 500 or sector ETFs or anything like that. You're not trying to get rich slowly over time by taking less risk, doing research, anything like that. You're trying to just gamble and get rich quick, which the risk reward is not worth it.
Yeah, the risk reward is very much against them. And if do you mind, I have a story on that. Years ago when Raji Kabaz and I were running Silver Arrow, I was in Florida and I was talking with this guy, nice guy. He was running his own business, had a wife, a couple of kids, and he was asking me a lot of questions about investing. And he was asking a lot. And eventually I said, okay, look, if you're interested in investing, we're happy to talk to you about, if you want to invest with Silver Arrow, like you're clearly interested in this and want my opinion on these things. And his response was, no, I think I can handle it myself. And so I said to him, let me ask you a question. You're not a 9 to 5 guy, are you? He's like, no. I said, you work really hard running your business. He's like, yeah, absolutely I do. I said, okay. Well, when you get home, do you go to work right away or do you want to spend some time with your kids? He's like, no, really important to spend time with my kids. I said, I totally get that. Your wife, you have a good relationship? He's like, yeah. I said, you want to spend some time with her? He's like, yeah, you need to invest in that relationship. I said, I agree. I said, on occasion, you want to get a little exercise? He's like, super important for your health. I said, okay. You sleep a few hours a night? He's like, whenever I can. And so I said to him, well, let me ask you a question. When you are investing in whatever you're investing in, do you ever think about who's on the other side of your trades? He said, no, I haven't. And I said, hi. I said, I do this 15 hours a day. I work 7 days a week. I've been doing that for decades. I said, this is all I do. This is all I think about. I said, it's someone like me on the other side of your trade. Or maybe it's Citadel or Fidelity. Or maybe it's Bill Ackman and Pershing Square or Dan Loeb,
This guy was a day trader. He was setting up like really short-term trade. He was putting a lot of capital to work for very short-term trades or day trading.
No, I don't think it was that. I think, he was asking a ton of questions about investing and was handling it himself, but didn't have the time or the firepower to really focus on it. The point is, it's not that amateur investors can't invest or find great stock ideas. And you know what? At Deep Knowledge Investing, the amateur investors who subscribe, these are smart people. Like they ask great questions. They're really thoughtful. There are amateur investors who do great work. This guy, the life that he lived, he didn't have that kind of time to do that research. And even then, like good amateurs can do a great job, but you may be facing off with professionals where that is all they do and they have better resources and better contacts and better speed. There are situations where news comes out and I make 2 phone calls and I know what to do with it, or I can process it quickly because I've seen 100 other situations like that. This guy would have never been able to move that fast. And, when things happen in the markets, he's tending to his own business. So it was really more a matter of figuring out your time and attention allocation. And it was very clear when he talked about his life that he didn't have the time to focus on it. And that's the thing, good investing isn't like a casino. It's a lot of time spent reading reports and doing research and going through 10Ks and like really digging.
Well,
And
retail traders aren't doing that though, Gary. I mean, like a lot of them, I have had some conversations with some of them. I mean, they look at a couple charts, man. They're doing a lot of short-term technical trading. They're momentum driven. They're looking at short-term technical charts. They spend very little time on research and fundamentals nowadays.
I agree with you. Um, but as you pointed out, what they're doing is zero sum gambling.
Now, I want to ask you about like some of the interviews that Scott Bessent, the U.S. Treasury Secretary, has given. Now, he's talked about that the U.S. economy. He believes, like some of the stuff that you and I talked about 10 minutes ago, that the U.S. economy is not fundamentally structurally sound. That government spending is a huge issue. I personally think that the Department of Government Efficiency, they've accomplished more in the first 2 months than I thought that they would accomplish in 4 years. Originally, I thought the whole thing was kind of a joke when Elon was announcing it with the meme and the Doge thing. But shockingly, they actually are going after a lot of the fraud that I've been telling people about for years, and they're actually like finding a lot of the stuff. I never thought that they would actually release this stuff publicly. I mean, I've known about it for years, and people just ignored it. Do you think? What do you think is the plan here with Trump and Bessent for the bond market and to fix the economy?
So first of all, I'm with you on Doge. I was on record early on as saying, well, look, I like the idea, but there's going to be limited success. And you and we're both small government people. I prefer more freedom and less government involvement in the economy and in our lives. But I will tell you that the amount of fraud, theft, graft, money laundering it's shocking even to me. And I thought it was bad, but the sheer amount of money being stolen or wasted, it's just even more than someone like me thought. And I think the best thing Doge is doing is bringing sunlight to all of this. And I love seeing that. I want people to see how ridiculous all of this is and why the government should not be spending our money this way. Um, we're spending billions of dollars to support programs in other countries that those countries don't want and are none of our business. It's just the whole thing is insane.
Well, it's money laundering. I mean, like those programs, a lot of the funds aren't even being used on the people in the other countries. It's like a it's going through multiple shell companies. It's a charity fraud. It's a way to get someone that's connected to the money trough there a high salary, or set up like a dummy company so they have a slush fund to pay family and friends a high salary and all these extra funds for their luxury lifestyle. I mean, that's how a lot of people, like those US aid funds, that's why they refused to comply with the executive order. I mean, there was just like a ton of waste, fraud, corruption, and abuse. The NGO money wasn't even being used on the poor people.
Yeah, that is 100% true. In some ways, it's almost like the plot of that Mel Brooks films. The producers, where they're doing Springtime for Hitler.
Oh, well, oh my God.
Right? I mean, that was
Yeah,
that.
yeah.
The plot of that is they take in too much money from investors, right? They oversold.
They're running a scam, right? It turns into a
Right.
Ponzi scam or something.
Yeah, right. So what they do is instead of selling 100% of the proceeds, they sold like 200% or 300%. And I said, what are we going to do if we make money? People are going to say, where's our money? We're not going to have enough to go around. And the answer was collect as much money as possible from investors and put out the most ridiculous, horrible production possible, have it fail, and then everybody will expect they won't get their money back. And then you pocket the difference. I mean, that's pretty much what our government is doing. They looked at a Mel Brooks farce and said, "Oh, wait, we can use this as a business model." I mean, the whole thing is crazy. But I think you're actually asking a fantastic question on what Secretary Bessent and President Trump are trying to do. And I don't know who coined the term "kill stocks to save bonds," but I think the first time I saw that expression was Michael Guyed from Title Financial and the lead lag report. And this is something really worth thinking about and explaining. So prior Treasury Secretary Janet Yellen did something that was really terrible. So what she wanted to do was, her party was running for reelection and she wanted to do everything she could to help. And so what she wanted to do was give a boost to the US economy. It's pretty, it's a lot easier to get elected in a good economy, reelected in a good economy than a bad economy. And so what she did was she shortened the duration on our treasury securities. So instead of refinancing like 5 and 10 year government bonds with other 5 or 10 year paper, she would finance it with like 1 year paper. And you saw last year a big increase in the size of government auctions and a huge increase in the tails. And a tail is just a fancy finance way of saying there was less demand in the auction than what market levels were anticipating. It means they put too much supply in the market. And the reason Yellen did that was she was trying to by she was trying to lower by reducing the supply of like 5 and 10 year paper. She was trying to lower the yield on that paper, right? If it's scarce, then people bidding for it have to bid up for it. And those are really the rates that people use to finance things. And so the idea was if she could lower the rates on that people use to finance things, you could spur the economy. Well, it didn't work. And, her party lost the election. And Bessent, from where we are right now, has to refinance $7 trillion in the next 12 months. Right. And what's our on balance sheet debt right now? 37 trillion, something like that. So he has to refinance $7 trillion. Now, if we roll over, the prior low cost debt to current higher cost debt, because rates are higher than they were 5 years ago or 10 years ago, that's going to be a problem. We're going to blow out the budget. And we end up, this is what like Lynn Alden calls fiscal dominance. It's, what I've called, counterintuitive inflation. But basically, we can end up with more inflation because the government will have to print more money to cover the higher interest expense. And we're already way over $1 trillion now. So what do you do? And the answer is they are doing everything they can to crash the stock market. And you think, well, wait, why would you want that? And the answer is because if they make the equity markets seem more risky, then that will push money out of the stock market and into the perceived safe haven of bonds. More demand for bonds means lower rates on bonds. And then Bessent can refinance at lower rates and not blow out the budget and create more inflation for it. And you saw that a day ago. The reporters were interviewing President Trump and they said, hey, did you see, the NASDAQ was down 2%. He said, no, I didn't look. And they asked him to comment on it. And he said, it'll take care of itself. Now, remember, this is a president who in his first term used a rising stock market as a marker for his success. He liked using the stock market as a report card. He said, look what a great job I'm doing with the economy. The stock market is up. This time around, he's flat out telling people, he said, you should expect there will be short-term pain. We need to do this for long-term benefit. Bessent is right. The economy is not on solid footing. It is a debt-filled house of cards. And so they're flat out telling you, we will take the equity markets down. You should expect some pain. Be prepared for this. And then they ask him questions on it. And he says, I'm not looking. It'll take care of itself. This is a very different President Trump than we saw in his first term, because I think he understands we need to take some short-term pain to do something to try to address the long-term problems.
And this is what you get to towards the end of what Triffin's dilemma, the world reserve currency for decades, and what it hasn't been reciprocal free trade for decades either. But basically, it seems that we're at the point here where the gold community has been warning. Now they've been predicting this every year since 2008. But finally, it looks like we've gotten to this point where the U.S. federal government, the interest payments on the debt, too much debt has to be refinanced. The bond yields on the U.S. Treasury debt are not coming down. They can't really do close to zero interest rate policy without creating even more inflation. So basically, there's no good options now at this point, Gary, because for 15 years we had close to zero interest rate policy, and there wasn't, the debt growing at rapid amounts of rates. They got away with it for so long, but now we're at the point 15 years later, post 2008, where they can't do all the same policies that they've gotten away with for the last 2 decades.
Jason, you're 100% right. And, you know, every country loves the idea of having the world's reserve currency, right? You're like, hey, we get to make the rules for everyone. We get to run the global economic system. We get to, uh, you know, have our currency be the one that matters. Um, and it seems like a great deal. And over the past really 4 or 5 decades, really 5 decades, we have spent much more than we produced. And the reason we were able to do that was because there was demand for dollars, right? Jason, you know the answer to this. What is the number one export of the United States?
Warren Buffett even made a cartoon on this. Did you ever see that? Warren Buffett actually paid for the animation like 20 years ago. It's actually like a minute or two long. He actually explains a lot of this with the trade situation where other countries produce goods. It comes into here to the US without tariffs, and the US just ships out dollars.
So I did not see the Buffett cartoon. I haven't seen that, but you're completely right. The number one export of the United States is dollars. And so for 50 years, we've acted like, well, this is great. It's free money. And in many ways, it has been free money, except we have two problems. One is, hey, anybody notice what's happened to inflation since 1971? Right? What happened in 71? Nixon took us off the gold standard, and right? We got a problem. And people blame Nixon for that. But remember, the reason he had to take us off the gold standard was because overspending meant the dollar was losing actual value against gold, and we'd agreed to a peg. And so, countries like France were realizing, wait a minute, the gold that the Americans are holding for us is denominated in dollars that are depreciating. They could end up giving us dollars, give us the gold. And, Nixon did a quick calculation and realized, hey, if everybody asks for their gold back, we will have negative amounts of gold. And that's when they closed the window and said, no, we are going to sever the link between the dollar and gold. And so as a result, since 1971, we have had massive amounts of inflation. And that has not only harmed the American people, and in particularly poor people, but going back to the beginning of our conversation, it affects people's incentives, and it pushed our society away from producing more than we consume and saving and investing the difference and having more financial security throughout our lives and in our later years to, as you described it, a consumer-led economy. Our economic growth is actually measured by how much we spend, which is completely insane. So we have all these bad incentives, and that's where we've gone. The second problem with having the world's reserve currency is the only way it works is if you supply people with dollars. And the way that you do that is what you said. You have to run a trade deficit. Well, what's the other side of that? It's the thing that everybody likes to pretend doesn't exist, a skyrocketing debt. And people act like just because we don't have to pay the bill today doesn't mean that we don't have bills, right? And again, go back to the, example we used before. If you and I, got a private jet and flew to, wherever and, started to get, super expensive resort hotel rooms and helicopter rides and just, and said, look how much money we're making. No, we're spending money and that credit card bill is going to come due. And so that's the downside of having the world's reserve currency. It's a really fun party until you get to the point where no matter how much booze you pour, everybody's still hungover.
Well, it also makes the U.S. economy. It's not anti-fragile, as Taleb would say. It's fragile. It's not as resilient. There's too many rules, regulations, taxes, red tape, corruption, theft, waste, fraud, all these things. And a lot of it, I would argue, is because of the dollar as a world reserve currency, because DC was able to run trillion-dollar base case budget deficits for so long and export all those treasuries to China and Japan and all those dollars offshore. So they got away with all this waste, fraud, corruption, and abuse and misuse of funds. And then the U.S. economy is not resilient. It's not anti-fragile. We're reliant on what this just-in-time supply chain inventory. And then we don't have the skills or the factories to manufacture stuff on our own. down if, let's say, China decides to ban rare earth exports, or one of our other trade partners says, you know what, we need these goods or these commodities domestically. We're not going to export it to the U.S.
Yeah, Jason, you're right. I mean, look, think about the fact we don't make ships here. We can't make ships here. And I do think our inability to produce high-end semiconductors in the US is a national security issue. And the one that really worries me, a lot of people don't know the history here, but our pharmaceutical companies used to produce in Puerto Rico because they got tax breaks there. And, a few decades back, some, genius in Congress looked at that and said, oh no, this is terrible, right? How horrible is it that our pharmaceutical companies aren't paying a lot in taxes? So they changed the law and said the pharmaceutical companies in Puerto Rico have to pay more in taxes. So what happened was all of that production, or at least the production of the precursor chemicals, got sent to China. And so China produces all of that. And basically, we rely on China right now for something like 90% of our pharmaceuticals. And if somebody wants to argue, well, it's not really 90%, yeah, okay, but they make the chemicals or compounds that are used in 90% of our pharmaceuticals. So imagine a situation where we have some sort of significant conflict with China, and this is really easy to imagine. And they say, okay, fine, but we're going to kill grandma, right? No one's getting heart medication or, whatever they need. Imagine them being able to turn off our supply of pharmaceuticals, which they certainly would do if there were armed conflict over, Taiwan, which is coming. So,
Well, haven't they already done that with rare earths, and that hurts the technology companies in the U.S.?
yeah, they're certainly talking about it. We're not at a point where it's a disaster yet, but that's that what they're doing is they're saying, hey, you know, we have recourse if you do things we don't like. We can, it's not one-sided. We can hurt you too. And they're right. And I'm not saying we should give in to China. I'm saying the position wherein you talked about us being fragile, I agree with you. And we're in a position right now where, they can hurt us. And so, is the answer to that to do whatever China wants? I don't think it is. I think the answer to that is to remove the disincentives for us to have manufacturing here. Right. And, it seemed, I'm sure, to whoever in Congress, I don't know who in Congress it was that, said we should be taxing these companies. But remember, they went from taxing a small percentage of a big number to taxing a big percentage of zero. And we lost all that manufacturing capacity. So a lot of this stuff really needs to be on short. I was talking with somebody, an expert in the tech sector today. And this is somebody who spent decades working for a variety of some of the biggest names in the technology space. And, one of his complaints about the Trump tariffs or proposed Trump tariffs, he said, the pain is going to come right now, but it's going to take years to produce these fab plants here. And my response was, yeah, you're completely right. But if we have a problem that takes a long time to fix, then you have to fix it. And he said, yeah, but it's not going to be done during this administration. And that's part of the problem, right? Part of the problem is the Chinese Communist Party is, they've got 5-year plans and 50-year plans and 100-year plans. We're running our country, on a 24-hour news cycle, a quarterly reporting cycle, and a, 4-year election cycle, or a 2-year election cycle, really. That's a problem. And so, yeah, there are certain things that we've done that worked really well, that were pleasant in the short term, but have created long-term problems. And the only way we're going to get out of it is to take some short-term pain to try to fix these things long-term. Now, will it work? I don't know. But what I do know is what we're doing right now is putting us in a precarious position, and it's not going to work long-term. So anybody that wants to try to change the status quo, if what you're doing is 100% going to lead to disaster, you have to try something different.
Do you think that that's why the gold price the last 6 months has rallied more than people thought? Because, historically, when there's this much uncertainty, the dollar is strong. inflation is supposedly coming down, the gold price might not rally as much. Do you think that the foreigners are saying, well, we don't know if what the policies Trump's going to implement are going to work out. We're just going to start buying gold?
Yeah, I think that's part of it. And certainly, the Trump administration, which wants to onshore more manufacturing and basically reduce imports in exchange for more domestic production, having a weaker dollar helps in that way. So there is that. But it's also worth pointing out, people are focused on this right now, Jason, because gold is hitting all-time highs and because 3,000 is, it's a notable number, right? People like numbers with a lot of zeros. But the truth is, despite all the fraud and abuse that Doge is uncovering, we're still running $7 trillion budgets. We're still running multi-trillion-dollar budget deficits. And so the thing that's really created inflation, right? People like to talk about tariffs and Putin and the boogeyman and COVID and supply lines and the other boogeyman. People have a million, theories for inflation. It's as better economists than I have said, it's a monetary phenomenon. We are spending more than we make. We are producing, we're printing dollars to cover up the difference. And so, when you have an increase in the money supply, but the same number of goods, it's more dollars chasing the same number of goods, you have price inflation. And that's, I think, more than anything, the trend in gold, which has been a multi-year trend. I don't know that it's related to this administration. I think it's related to, as you pointed out, a decade and a half of zero or near zero rates combined with a massive expansion of the money supply.
Well, I think the other major factor now, because we're 3 years past the Russia sanctions, I think there was a paradigm shift. Because yes, there was a lot of central bank purchases, but basically the monthly dollar cost purchases for non-G7 central banks more or less doubled after those Russia sanctions in early 2022, and we have 3 full years of that. You add in what the Asian retail investor from other weak currencies, what in Japan with their currency problems, Korea. There were rumors of a Chinese yuan devaluation. I think the Chinese money supply just started to go parabolic. So domestic retail investors in those countries and now institutional investors are starting to worry, what about a bear market in stocks, Gary? And they're like, we don't have any allocation to gold. So if they add 1 or 2% allocation to gold, that's going to move the price up to these levels.
Yeah, and by the way, I can certainly tell you my allocation to gold and Bitcoin is a whole lot more than 1%.
Well, but as you know, you manage money, right? When you're managing a hedge fund, right? Most hedge fund managers are generalists, or they have to do they have to have what, monthly or quarterly reports. So they're not going to add like a large amount of gold exposure because they're not going to get a lot of juice on it for those monthly statements.
Yeah, I agree with that. And the truth is, I didn't start investing in gold until 2020. And it for me, it was a result of seeing the massive amount of spending, COVID related spending, and realizing what the implication of that was. And I started buying gold in 2020 for the first time in my life. And, even more than that, Jason, before 2020, like when I was running hedge funds, I spent very little time on macro. I really was just looking bottom up financial analysis, individual company analysis. And that worked for me. Like being a stock picker that's a great profession. It's a lot of fun. And it can be very profitable. But it was the massive COVID related spending in 2020 that made me say, yeah, I now need to learn about gold, energy, Bitcoin, macro. I went from being, a generalist to being a more well-rounded generalist and picked up a whole bunch of, covered a whole bunch of things that I'd never spent time on before.
I think you have a very similar story to a lot of other hedge fund managers I've spoken to off the record that haven't necessarily come on this podcast, but I've had email conversations, phone conversations with them where they said, like, for their customer funds, they can't buy gold, they can't buy silver, they can't buy Bitcoin, but for their own funds, they're buying inflation hedges. So they're adding to those things because for their own personal funds, their retirement accounts, they see like, my God, what are both parties doing in DC? Neither one seemed intent on cutting any spending, and they were spending. They didn't seem to care about the amount of inflation and stagflation that they were creating. But finally, after years and years of accumulation, Gary, we get this mess now that Trump and Bessent have inherited. And yeah, they added to it, but it seems like it's way worse than it was even a couple of years ago. And there are no good options at this point.
Yeah, I think that's true. One of the things that I think is really interesting is President Trump and Secretary Bessent. They really are saying we will take short-term pain that people are not going to like in exchange for trying to fix a long-term problem where the benefits may not be present until, the end of this administration, the next administration. And, again, you can like them, you can dislike them, you can like their policies, you can dislike their policies. But I always have a certain respect for people who have the integrity to do the hard thing that's going to make them look bad in the short term because they think it's the right thing to do for the long term. And I think the US has suffered for many years from politicians who did the exact opposite of that and just said, hey, let's just keep handing out free candy because it gets us reelected. And again, that doesn't mean if you're listening to this and you despise President Trump, fine, go ahead and despise him. If you don't like his policies, cool. Tell us why. Specifically what
I
don't you
mean,
like
for
about
many
it?
years, Gary, there was very little difference between both political parties. I mean, they had very similar foreign policy. The Republicans, when they were in power, they weren't cutting like Mitch McConnell and Lindsey Graham and John McCain. They weren't cutting any spending. So some of these guys would run an election saying, we're going to cut government spending. They wouldn't cut anything.
That by the way, you mentioned McCain. Just a reminder, this is a guy who voted 7 times to repeal the Affordable Care Act because he knew it was going to increase the cost of medical care, and it has, right? Our medical expenses have gone through the roof because of that. But the reason he was so comfortable speaking out against it in public, and then after that, voting against it was because he was in the minority. And so it was a safe vote to take. He looked principled, but he was taking no risk. Like he was casting this vote that he knew he was going to lose. And the last vote of his life, he would have been the vote to overturn the Affordable Care Act. And, when he was dying of cancer, he flew to Washington and voted against it. So the one time he voted 7 times symbolically with no effect to get rid of it, but the one time it would have counted, he didn't do it.
And he was always in favor of increasing the Pentagon budget. So the military spending, pro-war. I mean, like most of the Republicans, most of the money that they make is from the military-industrial complex. So that's where those guys make a lot of their stock picks and stuff like that. Both political parties. I mean, your former hedge fund manager, Gary. Like it just seems like both political parties in Congress, they seem to be the top hedge fund managers now, but they're all trading on inside information.
Yeah, they are, and it's a huge issue. And in fact, a month ago, President Trump was talking about, should we have a sovereign wealth fund? And my response was, I'm generally against it unless we can have Nancy Pelosi as the fund manager, in which case we're all getting rich. So let's go for it. Can you imagine like Nancy Pelosi running a national sovereign wealth fund? And that's like, I'd pay to see that.
Well, aren't they putting Bitcoin? They're putting the Bitcoin strategic reserve in there. I've heard theories about that they're going to do stuff like this because they took some of the government confiscated crypto and they've been talking about putting it into a sovereign wealth fund.
Yeah, they're talking about it right now. The thing is, they're not buying more. They're not going to sell it. We'll see. We'll see what happens with it. But yeah, I mean, that's potentially interesting. I also think, you make a great point about the uniparty and the lack of spending discipline from both sides. When I was growing up, there was sort of this sense of compromise meant you get some of what you want and you give up some of what you want. And that was how things used to be. Now compromise means the Republicans get all of their preferred spending funded and the Democrats get all of their preferred spending funded. Right? The answer is always increasing deficits and always increasing spending. And, one of the things I think is really interesting are how inaccurate some people's reputations are. So if you remember during President Obama's first term, there was this sense that, he was a huge spender, and that was accurate, right? I mean, he ran up more debt in his something like more debt in his first in his 8 years than the country had in the entire, 200 plus years of its history. The guy was an enormous spender. And the narrative was that, that was him. He was the liberal big spender. And sharp pencil economic conservatives like Paul Ryan were uh, the voice of reason, the people arguing for fiscal sanity, but take a look, right? Paul Ryan signed off on those gigantic Obama budgets and got the spending for what he wanted in there. So this
Yeah,
narrative
they're
that
all trading votes. They're all trading votes for favors or side deals. I mean, this is the thing that the average American does not understand. They don't understand. When Speaker McCarthy, who's been in Congress for decades, the guy from California, when he was
yeah.
Speaker of the House for a short amount of time, I mean, he was negotiating side deals with Biden in the White House. I mean, he was willing to allow a lot of the Green New Deal spending into the congressional budget stuff for the debt ceilings and stuff. He was doing side deals. He was very corrupt.
Yeah, and that's the thing. The narrative that Democrats are the big spenders and Republicans are the fiscal conservatives is complete nonsense. The only fiscal conservatives in Washington, are Rand and Ron Paul, and unfortunately Ron isn't there anymore, right? I mean,
Well, yeah, they're
most
both doing Keynesian economics. So I think that's the main thing is they're both using Keynesian economics, but the Democrats, the way I would summarize them is tax and borrow and spend. And the Republicans, their policy with the supply side is still central planning and it's just borrow and spend. So they would cut taxes, but then they wouldn't cut government spending. They would actually increase government spending. It was what on military or other stuff.
Yeah, and that's the point, right? And so now we're in a situation where compromise means everybody gets all their spending that they want, no matter what. And one of the things I spent all of last year telling people is we have a gigantic spending problem in this country. That's why our dollar is being debased. That's why we're experiencing inflation. That's why things are getting harder and more unaffordable for most families. And what I told people is, listen, there are all kinds of reasons that you might have to vote for one party over another, one person over another, but spending isn't going to be the answer. I said, we cannot vote our way out of this. No matter who you vote for, we are going to overspend. There is, again, no one in Congress outside of, Rand Paul, who is in favor of cutting spending. And the thing that's really obscene, and I've been talking about this for a couple of years now, is that Congress used to fund their spending with taxes. And it forced people into that really uncomfortable situation where they got to, April 15th and they had to sit at their kitchen table and write a check. And if the size of that check to cover our government spending was too big, they would, go vote for a politician that would, recommend lower spending. And if on the other hand, the economy was good and the check they had to write wasn't too big, or they felt like they got good government services that was a good value for that check, they're like, okay, well, I like these guys. Let's keep them in place. And that was sort of the check on that. And now what Congress has done is they've decided instead of funding the government through taxes, which forces the American people to make difficult decisions sitting at their kitchen table, they've decided to fund our government with inflation, right? That we just have unlimited debt, unlimited money creation, and that's how they're funding it. And the reason they do that is because taxes are unpopular, handing out free candy is very popular, and nobody knows enough economics where again, they can blame President Putin and COVID and supply lines and the boogeyman and and greedy corporations, you know they can blame everybody but themselves, but they're the ones at the source of our inflation problem. They're the reason why our lifestyles are getting more difficult, why spending to maintain your lifestyle is getting more and more difficult, and that's a bipartisan problem. So you can't vote your way out of that one.
Yeah, I totally agree. The whole system, I think the average person doesn't understand this because I see people talking about, oh, there's going to be deflation, bankruptcies, defaults. there can't be that type of scale of deflation, bankruptcies, and defaults, or the whole system collapse. Because I think post 2008, Gary, with the bank bailouts and the way they went with the government debt, they basically turned the entire global financial system into a Ponzi scheme with all the bailouts and stuff like that, and the zero interest rate policy for so long. But then you get to the point where there's too much debt, where there are no good options. Basically, Lynn Alden calls it fiscal dominance. It's yield curve control or financial repression, where the government, whether they cut interest rates to zero, close to zero interest rate policy, that creates more inflation. They raise taxes, that hurts the real economy. So basically, there are no good options here. The long term, short term pain, long term pain, you cut government spending, you start fixing the private sector, you allow innovation, entrepreneurship, small businesses to start making investments into the real economy, to new products and services, factories, property, plant and equipment, start growing jobs, those types of things. But like in the short term, though, that's not really going to help anyone or the stock market.
Yeah, exactly. And I think, what you're laying out is what President Trump is trying to do. Whether he succeeds or not, who in the world knows? But at least he hasn't fallen into the same uniparty trap of just, outsourcing more and more and just letting everything hollow out more. So I'm hoping he succeeds with it. We'll see. We'll see what happens. But I think you're right. Like it's a bit of a mess there, and you're right. By the way, you want to hear something that's completely crazy? Did you happen to see the discussion today between Rudy Havenstein and Tracy Schuchart on X? So there's now talk that the Federal Reserve will have a bailout fund for hedge funds. So we went from bailing out the banks in 2008, which was a horrible thing to do. It was terrible. Now they're talking about bailing out hedge funds.
Oh, you mean overtly? Because if you talk to certain people, I mean, they basically did that during the 2019 repo madness crisis, because there was a bunch of portfolio managers at banks and hedge funds that had borrowed in the repo market and put on those over leveraged bond trades like risk parity and the basis trade, and some of those guys blew up. And that's why the Fed's balance sheet increased by $1 trillion in about 3 months in 2019 during the repo crisis. I mean, they lied about the size and scope of the crisis. From what I heard, like the credit markets, there was a bunch of foreign hedge funds too, and foreign banks, portfolio managers that got in trouble with that too.
Yeah, I think it's stuff like that. I think the fear is that we went from too big to fail banks with leverage and balance sheets where it was impossible to calculate their downside exposure to realizing, oh no, we now have hedge funds, managing hundreds of billions of dollars or hundreds of billions of dollars, but they're leveraged, or places like BlackRock that manages trillions of dollars. And so I think their fear is, what if these guys are long options, or even worse, short options, and they get locked up in illiquid positions, like there could be systematic failure. And so again, we're just expanding the area of too big to fail, when my view is we should eliminate too big to fail. That if companies are that big, or funds are that big, or banks are that big, and they're doing stupid things, do not subsidize that. It's going to be horrible when they fail, but let them fail. And that should be the warning to get people to stop doing that. And that will force funds to move from these crazy institutions to places that are, more cautious and have better risk control. And that's the only answer, but we're going in the other direction on that potentially.
Yeah, that's exactly what I was going to say. For decades, I mean, I think it started with long-term capital management.
Yep.
So there was like bailouts there, and it just seems
98.
like these bailouts of hedge funds and banks, it just gets worse. I mean, look, the Swiss government had to step in with Credit Suisse, and they had to guarantee, I think there was like in writing, they had to guarantee all these interest rate swap derivatives. So UBS would agree to buy the good assets, I'm using air quotes here, for Credit Suisse, and the Swiss taxpayer had to fund the difference.
Yeah, so the one thing that was different about the long-term capital management bailout in 98 was it wasn't actually the government. It was Wall Street firms saying, holy crap, if we don't all kick in and fix this, Like we're all going to be out of business. So I think
Okay, so it
the
was a private bailout. Then you're saying they weren't using like government funds.
right, right. The worst that you could accuse them of was collusion, but it was collusion to save a competitor, not put a competitor out of business, and it was collusion that ended up making their customers better off. Like that really was the Wall Street bailout, not a government led one. And then I don't know if this is true, but there's a rumor that at the time Bear Stearns refused to kick in, and that was why they were allowed to go under in 2008. I don't know if that's true. That's the rumor that's gone around. But the point is,
They had a huge. They were the holders, I think, of the short position, the short futures contracts for silver too. They were one of the largest shorts in the silver market too.
yeah. So it that really was you know, Wall Street's a competitive place, but they don't actually want to see big firms going under and collapsing the system. So they came together to do that. Try to imagine like in the airline business, some airline is about to go bankrupt, and like United and American and JetBlue all get together and put together a bailout fund and say, here, don't go out of business.
Yeah, normally they wouldn't do that. I mean, they might force the government to like create like a government sponsored enterprise. Isn't that how Amtrak was created? Now Amtrak's a mess. So hopefully they privatize that, and then we can maybe have bullet trains.
Yeah, terrific. Let me know when that happens because we've been working on that for what 40 years, 50 years.
Well, I think California keeps like showing that like the government can't really do that well. So the private sector should be hopefully be able to handle something like that with infrastructure and investments.
Yeah, let's hope. You know what it reminds me of? I grew up in Detroit, and during the years when I was growing up there, a lot of people moved out of the city and into the suburbs, and typically it was people who were wealthier. Um, and so people with more money would tend to move out to the suburbs, and the city got on a per capita basis more and more poor. And they had this idea that they were going to build basically like an elevated train, kind of like the Chicago L, and run that out to the suburbs. And the thought was great, these wealthier people in the suburbs, instead of having to drive through traffic to get to downtown, you can take the train, you park at some big parking lot in the suburbs, and then just take the train and be in downtown Detroit, and people will come and spend money. And that was the idea. And by the way, hilariously, they had the great name. They named it the People Mover. Don't ask me who came up with that. So
I think it was a copy from Disneyland. I think they had something like that at Disneyland.
Oh, all right. So this People Mover thing, Jason. By the time they were done, politically, it became people argued we shouldn't be doing anything to connect the suburbs. Let those people, stay away. And the project they ended up spending 6 times more money than they had initially budgeted. And what you ended up with was this useless little ring around downtown Detroit where like each stop was like a 5-minute walk from the next stop. Like the stations were really close together. And it was, you had to be living in downtown Detroit to want to use it. The whole thing failed miserably because there were political considerations, and they spent a ton of money and got nothing out of it.
It was even worse than that in California. I don't know if you've looked into the bullet train, but actually it leaked where they were going to build the route, and you had like people speculating on the land, and they bought the land ahead of time from leaked information, and they were trying to sell it back to the California government at like insane prices. So like it was supposed to, I think, cost $80 billion to build the bullet train from, I want to say, San Francisco down to San Diego. And for that amount of money spent, I think they were able to build about 20 miles of track in 15 years.
So how many miles does it take for a bullet train to get up to full speed, and how many miles does it take to slow a bullet train from full speed?
Well, it just shows you waste, fraud, corruption, and abuse. That when the government tries to do it, all for the construction industry in California is just insanely corrupt too. And then you have the permitting process and all that. But like there was so many entities there that had their hands in the pot trying to steal. And then, like I said, there was like the real estate speculation that anyone who figured out where they were going to build the train had all bought the land ahead of time. Maybe they had bribed to get the information, or someone had sold the information to them, and so they were holding out. They bought the land and they were trying to resell it to the government at insanely high prices.
You know what, Jason? That was the plot. Do you ever see that old series Boardwalk Empire with Steve Buscemi?
It sounds. I think I've seen a few episodes. Yes, it sounds familiar. I mean, they did that in Japan too when they were building out like their bullet trains. So, like, I mean, it's in human nature when there's a huge government project and like there's entities that are going to try to figure out like what's the racket, how can I make extra profits on it. This happens all the time.
Yeah, so it's basically it's the story of these prohibition era gangsters, and a lot of the plot lines involve the collusion discussion, between politicians and these, and organized crime. And so, there was this whole thing where I think it was like in New Jersey where they were going to build a highway. And so people figured out, oh, well, my government contact told me they were going to build a highway through here. So, people were buying swampland, for pennies along the route. And then, the highway goes through there and it was worth a whole lot more. So that was, actually the plot of a maybe not so fictional story from, a couple of decades ago.
Well, I think that happened in the U.S. with the national highway system too, when they figured that I think there was entities there. There was restaurants that wanted to set up along the national highway system and stuff like that. So, which was meant to copy the Autobahn in Germany. So there's always stuff like that throughout history.
Yeah.
But we've been speaking for over an hour, Gary. It definitely sounds like you think that there's going to be a lot more inflation going forward. Maybe in the short term, there's going to be less inflation or disinflation. But overall, it seems like regardless of what policies are implemented, there's still going to be base case like substantially higher inflation if they do successfully implement what yield curve control.
Yeah. So here's the thing that would change that prediction is this. If Doge succeeds, and I hope they do, there would be massive amounts of wasteful spending cuts and lots of people who are, stealing or not producing for the American people in the government losing their jobs. And one of the fictions we have is we count government waste as production, right? So if the government, steals from us and gives that money to, their favored groups or their favored people or, theft for in whatever way.
Or hires private jets or spends here in DC at Michelin star restaurants or
Right.
Washington Capitol's luxury box seats or stuff like that. Yeah,
Exactly. We count that as GDP. We count theft and graft and money laundering if it goes through the government as production. And so, I think that's fraudulent, but realize that if Doge succeeds, we're going to have a lot of people out of work and a lot of government stimulus spending is going to go away. And I don't think for a minute that wasteful government spending, like if we lose that or we get people off the payroll who aren't producing value for the American people or who are working against the American people, I think that's great for the economy. But just realize that when they report those nominal numbers, you're going to be looking at a decrease in GDP, so a recession, and an increase in unemployment, right? I mean, the numbers are going to look bad. And the only reason they're going to look bad is because we're in a situation where we're counting fraud and waste as production. So if we eliminate fraud and waste, it's going to look like negative production. And I think that's a fiction, but just realize that that is stimulus spending that hopefully will be pulled out of the economy. That's wasteful stimulus, but just realize that certainly, like if you want to paint a picture of deflation or a lack of inflation over the next couple of years, I think that's what that scenario looks like.
Yeah, unless they change the GDP calculation, so we'll see about that.
And by the way, like people are arguing they shouldn't. I don't mind it. Like one of the things that bothers me is our productive private economy has been shrinking. That's, we were talking earlier about the fact that our increase in GDP is less than our increase in debt, right? More than 100% of our growth in GDP is coming from wasteful government spending. So, I don't mind that that they want to cut that, but I think we do need a different definition of GDP. Look, I get the way the formula works. I just don't think counting wasteful government spending as production is really good for anyone. And we're actually in a situation where politicians are incentivized not to cut wasteful spending, which is good for us, but it's good for the American people. But they're incentivized not to do it because when you look at the numbers, where are we going to be? It's going to be a recession, and that's a problem.
Oh, you mean so? Well, the GDP beats were causing the stock market to not decline. So, but I mean, at this point, the real economy is not reflecting the stock market, I would say. So, a lot of people have benefited from the asset price inflation, especially the baby boomers, people in Washington, D.C., people on Wall Street, hedge fund managers, but it hasn't benefited most everyday Americans.
Yeah. Yeah, I think that's a great way to sum it up, Jason.
And that's the Cantillon effect. I want to thank you so much for your time today, Gary. If my listeners want to check out your work over at Deep Knowledge Investing, how do they do so?
Oh, thanks for asking. You can find me at deepknowledgeinvesting.com. If you There's a free subscription available. If you click subscribe now, there's a paid subscription. The difference is the paid version has access to, my stock picks, my research. That's, where we're making money or trying to make money. There's also, if people have questions, if you go to the website, there's an Ask Gary button. If you click that, I will read your question, and I'm really good about responding to people. I, enjoy the interaction. And then, if you go to X, I'm at Gary _Brode, Brode.